Hi, I'm Kylie Mathieu and welcome to Wealthy Millionaire. Today we're going to talk about how to finance for your home improvement. But first, I'm not an accountant or a lawyer, so always make sure to contact a professional for all your financial needs. Financing for a home improvement can seem overwhelming and costly, but with just a little digging around, you might find some options to offset the cost. With home improvements, you have a lot of choices like personal loans, refinancing your mortgage, equity loans, and more. This video will help you understand the different options you have available to fund your next project, from lines of credit to home improvement grants for single parents. Let's take a look at what loan might be right for you. Here are some of the best loan options to renovate your house into your dream home. First, a personal loan. One of the best ways to finance your home renovations is through a personal loan. A personal loan allows you to borrow funds without tapping into the equity of the home or putting up assets for collateral. The interest rates vary based on your credit score, but note that they will be higher than financing secured through your home. There's also a shorter repayment window, so be prepared to repay these loans within 5 to 7 years. You can access anywhere from $2,000 to $50,000 through a personal loan. That makes it the perfect solution for projects of all sizes. Another reason you should consider a personal loan is that if you have good credit, but not a large amount of equity in your property. Before you refinance your mortgage and pay additional closing costs, start your next big project by exploring your personal loan offers. They're often the most affordable and easy to access options for repairing and renovating your property. Number 2, refinancing your mortgage. Is the interest rate on your mortgage higher than average market rate? If the answer is yes, refinancing a mortgage can be a simple way to lower your monthly payments and get the funds you need to renovate your home. A cash-out refinance involves taking out a new mortgage that is greater than your current balance. You simply pay off your existing loan and keep the difference as cash. The cash comes directly from the equity of your home, and you can usually borrow up to 80% of your total value. However, refinancing your mortgage is not free. You're usually required to pay closing costs and reestablish your escrow accounts, so you might consider these additional expenses before moving forward. As you decide how to prioritize home renovations with these funds, focus on those that will increase the value of your home. Only choose this option if the costs over the life of the new mortgage are lower than other options, like a personal loan. So here are some pros to refinancing. It comes from your home equity, and you'd continue to only pay one mortgage payment. You can also lower your interest rate or loan term at the same time. And you can spend the cash on anything. Some cons on refinancing are closing costs applied to large loan amounts. A new loan will have larger balances than the current mortgage. Also, refinancing starts your loan over. Number 3, a home equity loan. Another way that you can access your home's equity to fund your renovations is through a home equity loan. This option allows you to get financing without financing your existing mortgage. Instead, you take out a second mortgage. A home equity loan might make sense if you already have a low interest rate on your home or a favorable payment term. Although the interest rate on this financing will be higher, the cost will only apply to the additional money you borrow from your equity since you do not have to pay off the current mortgage. Consider a home equity loan if you have a substantial amount of equity in your home or need funds for a major one-time improvement. However, consider that you may still need to pay original fees and closing costs, and add a second mortgage payment. Some pros to home equity loan are that interest rates are usually fixed, as well as loan terms can last anywhere from 5 to 30 years. You can also borrow up to 100% of your equity, and they're great for big projects like remodels. Some home equity loan cons are that it adds a second monthly mortgage payment, so if you still owe money on your original loan. Also, most banks, lenders, or credit unions charge fees and other closing costs. Number 4, a home equity line of credit. A home equity line of credit, or HELOC, can also help you finance your home improvement projects. It's like the HEL because it involves leveraging the equity in your home to access cash. But instead of establishing a second mortgage, a HELOC works like a revolving line of credit. You can borrow up to 80% of the value of your home less than the existing mortgage. Generally, you get a draw period of 10 years where you can borrow from the equity. During this time, you only cover interest with your payments, and then you pay off the rest during a 15-year repayment period. It's important to note that the interest rate on these loans is variable, so it will change each time you borrow additional funds. You should use a HELOC for home renovations when you need to borrow funds for an extended time frame. However, consider that adjustable rates can affect your payments, and they are typically higher than the other options. HELOC is a better option than a home equity loan if you have a few less expensive term projects to finance on an outgoing basis. Other things to note about home equity lines of credit include your credit score, income. A home's value will also determine your spending limit. HELOCs come with a set loan term, usually between 5 and 20 years. So your interest rate and loan terms can vary over that time period. So here's some home equity line of credit pros and cons. First, there's minimal or no closing costs. Payments vary between amount borrowed. Revolving balance means you can reuse the funds after you've repaid them. Some cons are that loan rates are often adjustable, meaning your rate and payment can go up. Banks or credit unions can change the repayment terms, and rates are typically higher than for your home equity loans. Number 5, credit cards. If you do not have the cash available and wish to avoid opening any new lines of credit, you can consider using a credit card to fund your home improvement. This should not be your first choice though, since credit cards tend to come with a higher interest rate. 0% interest credit cards are a viable option if you're willing to pay off your balances in a shorter time frame. These cards allow you to finance renovations at no cost, as long as you pay them off entirely within 12 to 18 months. The benefits to using credit cards include not having to put your home or other assets up for collateral, and the fact that many lenders reward you for using your credit line. However, the interest on credit cards can easily build up and leave you in more debt than you expected, as your payments are not fixed. Using a credit card can be quick and easy. There's no paperwork and no interest options available. But some cons are that interest rates are much higher than the other financing options. Credit card limits are often lower than home improvement budgets. Number 6, home improvement grants. Did you know that there are home improvement grants for single moms and dads? These grants help single parent households and first-time homebuyers repair and renovate their properties. Most of the grants only apply to structural improvements that remove safety and health hazards, such as plumbing, roofing, and more. They can also be available to individuals affected by natural disasters. So make sure to explore all your options before you go into debt to renovate your home. Number 7, pay cash. If you want to improve your home without taking out any loans, consider paying cash. While this may require some additional time to build up your savings, it ensures that you don't spend any extra money on interest or financing charges. Paying for your home improvements with cash can also help you stay within your budget. The best home improvement loan will match your needs and your specific situation. Here's a few things to ask yourself in order to make the right decision. Can you get a lower interest rate or a shorter repayment term? If so, a cash-out refinance could save money on your current mortgage and your home improvement loan. Are you doing a big single project like a remodel? Consider a simple home equity loan to tap into your equity at a low rate. Do you have a series of projects coming up? When you plan to remodel your home room by room or project by project, a home equity line of credit is convenient and worth the higher loan rate compared to a simple home equity loan. Is it an emergency repair? When you need an emergency home repair and don't have time for a loan application, you may have to consider a personal loan or even a credit card. If you're buying a house you know you'll need to fix up, check out the FHA 203K program. This is the only loan that bundles home improvement costs with your home purchase loan. Taking out just one mortgage to cover both needs will save you money on closed costs, and it's ultimately a simpler process. So which kind of loan is better for you? If your credit history is strong enough to qualify you for a 0% card, you can use it to finance for emergency repairs. Later, before the 0% promotion expires, you can get a home equity loan or a personal loan to avoid paying the card's regular interest rates. Would you prefer an installment loan with a fixed rate? If so, apply for a personal loan, especially if you have excellent credit. Just remember that these options have significantly higher rates than secured loans, so you'll want to rein in the amount that you're borrowing as much as possible. So find a way to stay on top of your payments. When you do a cash out refinance, a home equity line of credit, or a home equity loan, you are able to use the proceeds on anything that you like. You can pay off credit card debt, buy a new car, or even fund a family vacation. But is this the right thing to do? It's your money and you get to decide, but spending home equity on improving your home is often the best idea because you can increase the value of your home. Spending the money on a new kitchen or bathroom could add significantly to the value of your home. In the long run, it would be a much better investment. With that being said, if you're paying tons of interest on credit card debt, using the home equity to pay that off would make sense as well. As you can see, you have many options on how to finance to renovate your home. I hope this episode helped. I'm Kylie Mathieu. Thank you for watching Wealthy Millionaire.